Hello and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Today is Friday, November 12th, and this is episode 36. Thank you so much for tuning in. Before we get into the content, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when investing and always take responsibility for your own choices. Let's jump right into the daily scoreboard here. The spot price of uranium today, up $1 since the last market minute, which I did 2 days ago on Wednesday, $46.12 a pound mid-market. Interestingly enough, the spot price moved up yesterday with the Sprott Physical Uranium Trust not in the market. They purchased 0 pounds yesterday. What does that mean? That means there's other buyers in the spot market besides Sprott. This is something that we've known for a while, but it's always nice to see that evidence continue as the market moves forward. So yesterday, Sprott took in $12.9 million of new capital. And like I mentioned, they purchased no new pounds. Importantly, they closed at a premium to their net asset value of 5.18%. Again, they need to be at greater than 1% premium to NAV in order to issue shares into the market and raise capital. Because they purchased no pounds yesterday and added that 12.9 million, their treasury swelled to 69.8 million in cash, enough to buy another 1.5 million pounds of uranium. Since the 17th of August, Sprott has raised 916.6 million in new capital and have acquired 19.5 million pounds of U3O8. That means that based on their 1.3 billion allocation with this original 2 at the market vehicle financing vehicles, they have 383.4 million to go on this current ATM. After that runs through, or when it's close to running through, they will file again for a third ATM allowance. This will likely be at least another $1 billion worth and continue to operate as they are currently. Turning to the ETFs, because I didn't do a market minute yesterday, I'm going to do 2 days total. Over the last 2 days, URA reported 1.1 million shares of new issuance. URNM reported 175,000 new shares of issuance. Combined, that's a $40 million mandated buying between those two vehicles over the last 2 days. Nothing to shake a stick out there. The AUMs of the two trusts dropped slightly over the last 2 days by about 4 million, which is basically a drop in the bucket. The combined AUM, the assets under management of these two ETFs, now is at 2.54 billion. That's the AUMs have increased almost $400 million in the first 9 trading days of this month. That has a lot to do not only with the share issuance and the capital being raised, but the appreciation of the price of these two ETFs. The sector remains quite strong. Let's take a look at the charts. Starting off again with URA, as we always do, declining volume today and a little bit of a drop today. It looks like it's going to close down maybe 1% or so today. Overall, a very, very strong looking chart. URNM likely quite similar. Very, very strong, pulling back right down to that previous resistance point. Again, on declining volume, which I've repeated this ad nauseum. We'd like to see increasing volume on the way up, decreasing on the way down. I'd like to see this chop sideways for a little bit longer. Taking a look at the Sprott Physical Uranium Trust, another very, very solid day in terms of volume. I believe they've probably raised a lot of cash today, considering that 5% premium to NAV that they opened up with. Now the spot price has moved up, and the Sprott Physical Uranium Trust, with another half an hour trading today, is flat on the day, but the spot price has not moved up enough, in my opinion, to bring that back down to a discount to NAV. Therefore, this big volume means they are raising a lot of cash today. We are going to see some more substantial buying of spot uranium by the Sprott Physical Uranium Trust. The large caps probably moving similar to the ETFs. Actually, Cameco down on the day, but we're seeing a little bit of dip, some dip buying going on here. Very strong looking chart. I'm going to take a look at the mailbag here and see if there's a question for us. This question came to me through Twitter. Justin, over the years, I've heard people who are bearish on uranium say that Kazatomprom can flood the market anytime they want. Can you respond to that view? Also, any thoughts on the Kazatomprom conference call this morning? All right, so if you're not familiar, Kazatomprom is the world's largest producer of uranium. They produce about 40% of the annual of uranium of annual demand. They produce even more than that of annual supply. They produce roughly 60 million pounds a year. They have been a very, very consistent producer. And up until 2018, they were a state-owned entity. In 2018, they IPO'd. They now are at 25% publicly traded, 75% state-owned. It sounds like they will remain at that allocation of state-owned to publicly traded. And one of the biggest kind of bearish concerns for the uranium thesis is that this largest producer can and will ramp production to keep the prices down, and or to at least fulfill that supply and demand gap and therefore balance the market. And because of the way that they produce, which is ISR production, it's in situ recovery, it means that they actually extract uranium from underground aquifers via injection wells and extraction wells. They inject, in Kazatomprom's case, sulfuric acid into an ore body and extract out the uranium. It's extremely, extremely efficient, especially relative to underground mining or even open pit mining for that matter. They produce at a very, very low cost. Some of their lowest cost mines are around $10 a pound cash cost. However, fully allocated, if you consider they're all in sustaining costs plus the cost of capital plus the dividend that they pay, they're probably in the low to mid 30s per pound. Still one of the lowest cost producers in the world. Now, there's always been a concern that they can ramp production, right? And so I've covered this in the past, where you can actually show a curve of their production. In fact, I'm going to go ahead and share my screen here. Okay, so this is a graphic of the well-filled block production profile for Kazatomprom. And as you can see on the left-hand side of the chart, well drilling, piping, well connection, acidification, that process alone takes 4 to 8 months, okay? From there, you have the initial acidification of the ore body and the beginning of production. That really doesn't start ramping up until about 12 months from when they start drilling. That production peaks 16 to 18 months from when they started drilling, and it declines basically 4 to 6% per month for the remainder of the life of that series of wells. So what this means is even if Kazatomprom wanted to ramp production and they started drilling now, the initial production that came from those wells wouldn't really start hitting and be of anything of significance until 12 months from now. And it wouldn't peak out till at least 18 months from now. So, and with all of that said, Kazatomprom has already guided for their 2023 production to remain at 20% below their subsoil use agreements. So Kazatomprom's subsoil use agreements are essentially their permitted production. It's another way to look at it. And they are allowed to, let's say, produce 20% below or 20% above that wellfield, that subsoil use agreement. So at 20% below their subsoil use agreement, they end up at around 23,000 tons per year, which is about 60 million pounds. That's right. They're a little bit less than 60 million, 58, 59. That's right about where they're at now. And they've already guided to the market. They will continue with that level of production out through 2023. They continue to reiterate that they are not seeing the signals from the market, although that's changing rapidly. In order to justify ramping that production, they already have allocated the budgets necessary for next year in order to be able to achieve higher production in 2023. And they're not going to change that. And so a couple of highlights from the conference call this morning with Kazatomprom. They're continuing that value over volume strategy. That's basically what I just suggested, that they're not interested in flooding the market with excess volume. They are interested in being a value play for investors. And so part of that responsibility would be producing at a level that provides them with abundant free cash flow and a good dividend for investors without actually flooding the market and creating some suppression pressure on the price. They also stated that they are seeing supply chain impacts, just as most sectors of industry in most countries are right now. That's affecting their production, that's affecting their cost basis and their inputs, whether that's piping, whether that's sulfuric acid, whether or not they're having actual labor shortages. Either way, they've stated that they're seeing supply chain interruptions, and that's affecting their cost basis and their production levels. And so even with this guidance of remaining at roughly 23,000 tons, 60 million pounds ish, or 20% below their subsoil use agreements for the next 2 years, it's possible that these supply chain issues that they're seeing could even put downward pressure on that amount of production. So that's significant. They also stated that they're seeing increased interest from buyers, aka utilities. they announced 2 new term contracts with 2 Chinese companies. The CEO, the CCO, the Chief Commercial Officer of Kazatomprom, quote, I'm going to read a quote here. Chinese are worried about future security of supply, considering the program that they have. By that, he means the build-out program, the 150 reactors in the next 15 years, the goal of reaching 200 gigawatts by 2035. They're currently at just over 50 gigawatts. That's a huge, huge growth. Kazatomprom is aware of it. They've signed these new term contracts. By the way, these 2 term contracts they announced without putting a lot of detail into the finer points of those contracts. They basically reference that they would be market reference contracts, essentially the spot price. But they're not yet willing to sign purely term fixed price contracts because they're not seeing the prices they would like to see in order to be able to say, okay, we're gonna deliver out on these pounds 2025, 2030 at a fixed price. Well, why would they do that if they can see the writing on the wall of where the spot price is going? They're going to sign contracts that are either majority or entirely referenced to market prices, aka spot prices. So that's a pretty profound quote coming from the CCO of Kazatomprom, saying that he's recognizing that Chinese companies, Chinese utilities are concerned about supply out of the future, considering the plans that China has in their build-out program. And again, they're not intending to advise, they reiterated this in the call, they're not intending to revise their budget for 2022 or the production for 2023 based on what they've already guided for. So I think that at the very least, to summarize all of this, Kazatomprom is going to likely remain the world's most prominent producer of uranium. They likely will remain largely reliable. I don't expect huge hits to their production profile. I think that if anything, the current supply chain crisis, if it lasts a little bit longer, we could potentially see some production less than what they're guiding for 2022, maybe even into 2023. It's not something we're betting on, and it doesn't really matter, in my opinion. What really matters here is that not only, as I showed you in that chart, would it take a profound increase in budgeting right now to increase production 12 to 18 months from now, but they have already signaled to the market and to their shareholders that are depending on them maintaining this value over volume strategy, that they will not be doing that. Okay, so I think at least in the short to mid-term, this concern about Kazatomprom ramping production to kill the market is really just completely unfounded and unsupported by data, in my opinion. With all of that said, I believe that for a long time I believed that Kazatomprom had a concern or let's say a desire to maintain a certain percentage of market share. And I thought that at one point, I thought that perhaps that would encourage them to maybe put some downward pressure on the market if they could, to maintain that percentage of market share that they currently have. Why? Rising prices will incentivize not only care and maintenance mines that are waiting for that $55 to $65 a pound range, like Paladin's Langer Heinrich, to come back online. Cameco's McArthur River doesn't need quite that high of prices, but as Cameco management stated over and over, they want to see higher prices and sufficient term contracts signed before bringing that mine online. But even higher prices than that will incentivize greenfield projects. And I think what they're saying right now is they're putting 2 and 2 together. One is huge build out in China. They have, by the way, more than half their production currently goes to China already. Okay, so they're seeing huge build out plans in China, and their biggest customer is saying, we want more uranium. Okay, they're seeing growth in the sector. They're seeing all of these supportive measures happening in different various global governments that are saying, we want more nuclear for all the reasons we discussed ad nauseum in previous episodes. And then they're seeing two, there's big buying pressure coming into the market currently. These financial players that are coming in, which by the way, they are helping to fund at least the initial seed round of gosh, I'm forgetting the name right now. It doesn't matter. It's another physical fund that's going to be based in the East, and Kazatomprom is putting in almost half the initial seed capital, 50 million round. They're going to do a follow-up round of 500 million. This is going to be another physical fund. ANU is the name of the trust. And that's coming online next year, okay? So there's investor interest in various markets for holding physical uranium. So they can see this buying pressure of not only the physical, the physical funds and the financial interests, but also they're seeing increased interest coming from utilities for term contracting. So we're seeing major support on the buy side over here. We're seeing major plans for build outs and a quickly growing demand in nuclear for the foreseeable future. And putting that together, it doesn't make sense for them to grasp onto maintaining X amount of market share when they can just kind of accept what is happening, let's say, and sell uranium into the market at market reference prices, which could go above $100 a pound or more. And they will be the primary, I mean, the cash flow these guys will be producing based on producing, uranium all in and, less than $35 a pound is going to be phenomenal. We get up into the 50s, 60s, 70s, 80s, or even higher. So I think that they've finally kind of embraced what's happening here. And that, in my opinion, is a sea change, especially in investor sentiment, right? It's like no more worrying about Kazatomprom coming into the market and suppressing prices for their own interests. How about we completely flip that on its head and say, these guys are completely on board with the price going wherever the price is going to be going. And in fact, they're gonna benefit from it. That's a sea change, taking a bearish element and seeing it as potentially bullish. It's really a big deal in my opinion. So just wanted to give you guys some color on that conference call this morning and answer that person's question. Thank you for tuning in again. If you would like to see our track record, our performance to date with our newsletter focus list stock picks, we are currently up over 530% since inception. We were up over 15% in October. We're up over another 15% so far in the month to date in November. Please click the link in the description. I will also pin it to the comments. That will allow you to access a previous month's newsletter and get an idea of the type of content we put out. Another reminder for Uranium Insider Pro members, our next members only webinar will be next Thursday. We will have a couple of special guests on there from a company that's a holding of ours. And then again, a reminder for anybody who is not a member, if you're interested in joining, if you sign up before December 1st, which is when we'll be raising our prices, you will lock in the current prices for as long as you want to be a member. So if you join this week or next week and next year comes around and you want to stay on with us, you'll pay the same price that you paid this year, even if our prices go up over that time period, which they will in December. And I don't know about the future. It really depends on how things pan out and how much we grow and how much more help we need to hire, et cetera, et cetera. But so far, our returns have more than justified, in my opinion, the cost of the product. So if you're interested, click that link below. We'll send you a sample newsletter. You can check out our performance to date. You can check out the type of macro content we put out on a monthly basis. And if you join before next Thursday, you'll be able to join live on the webinar. These webinars usually go for about 2 hours. We go really in depth. We're going to go very in depth into the options trades I've mentioned before. One of those options trades, these bullish vertical call spreads, will roll off next week. We will have some fresh cash. We're considering putting that into another options trade. We will see about that. But we also will go in depth with the company we'll be speaking with, and then into the sector and all the companies we would recommend. We go very in depth into all of the nitty gritty over those 2 hours for the webinars. And we do these once a month, and those are for members only. So if you're interested, go ahead and click that link below. You will get a sample newsletter and you can check out our content. Thank you again for being here. I appreciate all of the support. Thank you for all the wonderful comments. And I'm glad to have this awesome audience here on YouTube. Thank you guys, and hope you have a really wonderful weekend. Cheers.